And following on from the stock indices, the Dubai financial market has successfully attracted 2,627 new investors during the first 9 months of 2016, including 418 institutions, raising the total number of DFM registered investors to around 839,000. According to Isa Kazim, the chairman of the DFM, foreign investor ownership in the DFM also increased to 22.2% during the period, which is a strong indication of their confidence in the market and its world-class infrastructure and regulations. He said that institutional investors have increased their participation in the market from 25.3% of the trading value during the first 9 months of 2015 to 28.3% during the same period of this year, with a net buying of 1.5 billion dirhams. He further stated that the DFM General Index has been the best performing amongst stock markets within the GCC region and came fourth amongst the leading indices globally, advancing 10.3% during the first 9 months of the year. He was commenting on the financial results for the first 9 months of 2016, where the company recorded a net profit of 175 million dirhams. That's a 29% decrease from 245.5 million in the same period of 2015. Net profit in the third quarter of 2016 reached 35.4 million dirhams, compared with 45.4 million in the third quarter of 2015. As retail trade accounts for more than 11% of the UAE's GDP and nearly 30% of Dubai's GDP, experts attending the Recon Middle East and North Africa 2016 conference and exhibition highlighted today how some of the key trends, such as technology, demographics, and experiences, have impacted the retail industry. While stating that the retail industry is key to improving the economic growth story of many countries in the Middle East, who are currently in the process of making a shift towards economic diversification, experts revealed that the UAE's retail sector is set to grow by nearly 5% every year through to 2017, and the market is expected to reach 200 billion dirhams. Although digital technology, innovation, and key trends such as online shopping are affecting Middle Eastern shopping centres and forcing them to approach newer business models, industry insiders highlighted that consumers still prefer making purchases at retail stores as they bring about a sense of community engagement, something that online space cannot provide. Commenting on how the millennial generation is having a major impact on the retail industry, industry professionals stated that as consumer spending patterns have changed with the advent of technology, retailers will need to overcome some of the key challenges, such as increased competition and a mature market scenario, while also looking for prosperity in the midst of challenging economic conditions.
The timing for our conference is always one we want to create some controversy, first of all. I think it's very important for people to talk about what can be, not what was or what is happening today. And I think when you look at the retail market overall in the region, it's more of a mature market. So when you have a mature market, it's time now to start doing different things. It's not a case where it's open the store and people will come. You've got to be much more selective on where you spend your money, how you invest your marketing, how you move forward to try and capture that customer. Whether it's an omni-channel experience, whether it's delivery, whatever it is, it has to change now to react to the times that we're in.
While talking about how demographic shifts, advances in technology and innovation, and consumer behaviour are impacting the retail market, representatives of Majid Al Futtaim Properties revealed that 90% of consumers access mobile devices while shopping, and the birth of e-commerce is forcing them to change business models. It was also highlighted that food and beverage, leisure and entertainment are still the major drivers of growth in the sector. The three-day conference and exhibition running until the 1st of November also included discussions on how customer engagement is vital to the success of the retailer.
I talk a lot about the relevancy of content within a physical space. And yes, technology is manifesting itself as a tool on how consumers can connect better to what they want to experience and and find within physical space, but the physical space itself and the kinds of merchandise or experiences that people are looking for within the confines of a shopping center, quote unquote, have changed. As I mentioned in my comments earlier, food and beverage has become a much bigger and important category within the content, because people are looking for ways to socialize, get into a place, enjoy the experience of good food and good surroundings. Fashion has actually slipped in its total proportion to the mix. But there are other replacements for that. So it's just think about it as a retailer or a department store may assort their merchandise based on what their consumers are looking for. A shopping center does the same thing. The proper use of mobile technology is going to be one of the clear connectors, especially as you're looking to relate to primary trade areas. But I would suggest there's something else in the business, and that is whether it's technology or physical content, never stand still. Because if you stand still, the consumer will move beyond you. And so you constantly have to think about ways to update, reboot, remix, reassort, and provide the right kind of relevant content to these consumers.
There's a number of kind of macro trends that are impacting the industry. First and foremost, obviously, is technology. Obviously, the growth of e-commerce. But I actually think this context that people have of, is it e-commerce versus physical, I think that's become kind of dated. To me, it's all about omni-channel and technology coming together, and the customers expecting that seamless experience. So I think that's number one, technology. Number two, I think, is demographics. I mean, we have a large baby boomer generation that's aging and kind of moving out of their prime consumer spending years, and then you have a huge economic or population growth in the millennials who are moving into their prime spending years. And what do they expect in a shopping experience? And personally, I think they are not moving just online. They really enjoy the social aspect of shopping, which plays into kind of that third macro trend, which I think is experience, and the importance of developing a differentiated experience. So online is very linear, right? It's very one-dimensional. When you come into a store, you have an experience, and not just the people that you're interacting with, but all the different offerings that are here. And I actually think here in the Middle East and Dubai in particular, I mean, that really, if you look at the retail properties here, I mean, they do a wonderful job of creating an experience. And so I think ultimately the big winners from a shopping center perspective, from a retail perspective, will be those that provide the best experience to a customer.
Off the back of fluctuating oil prices and economic instability, HR departments must now innovate and look for new ways to change business strategies. That's according to experts ahead of the HR Summit and Expo in Dubai next month. According to experts, some of the main issues facing SMEs in particular today is mainly focused around admin issues, especially when setting up a new company. They added that SMEs in the region are currently managing their HR needs through Excel spreadsheets, meaning that there's a lot of manual repetition involved, extra paperwork, and the system is not backed up or secure. The other option is an enterprise resource planning system, but these can be extremely expensive and therefore not viable for small startups and SMEs. Well, we spoke to Benapol, which was set up by a group of busy entrepreneurs last year, about some of the main challenges that they faced and also about the gap in the market.
We are, as a country, you know, we're a melting pot in terms of culture, nationalities, people from all over the world, but that breeds its own problems as well. So processes are often different. So, for example, a visa application process may be different for different nationalities. You've got lots of different types of businesses that operate here in Dubai. So while you've got heavy presence in financial services and leisure and tourism, who, you know, leisure and tourism, they work 24/7, 365 days a year, versus financial services who may be working on our local work week, or they may be working on an international work week. So all of these different variables can present challenges for small businesses trying to implement a system here. From our market testing, we really found that most small businesses still use Excel spreadsheets. So Excel presents a few challenges. So first of all, it's not automated. In order to be able to access it, so if you've got multiple members of staff working on a project, maybe it's in a HR team or office management, you've got emails floating back and forwards between members of staff. But ultimately, none of the processes are automatic. So it does mean lots of duplication in data, and it means that data becomes really segmented. So you may have 20 different Excel spreadsheets managing different parts of your processes, which can become really challenging in itself.
Benapol has launched a system which they say is life-changing for the SME world. It's been specifically developed for UAE SMEs and caters directly to the GCC market, taking into account the unique HR challenges such as tracking Emirates IDs, visas, passports, and much more.
It's a free system, and that really has been the biggest driver to people using it. SME businesses have been put under a great deal of pressure. Dubai is not a cheap place to do business at the best of times, so it's something that they really, really value, being able to take some pressure off of their critical admin or operational staff and implement this with ease. One of the concerns that people had when we first brought Benapol to the market was, okay, who has access to this? Well, in answer, everyone does. So all employees have access to the system. However, there are different permission sets, meaning that HR can see more of the sensitive information, things like salaries or very personal details of an employee, whereas administrators, they would have a different permission set. Some of the features that we believed were going to be incredibly well received was the leave tracker, and we weren't wrong. Okay, so tracking leave, particularly in this market, is something that's really a bugbear for many HR/office managers. So the system allows employees to apply for leave themselves from whether it's a smartphone, their tablet, their laptop, apply for their leave, and it's all tracked automatically. It also means that the office manager has visibility of who's off, when they're off, and they get alerts on the day to say, okay, expect that this employee is not here today. It sounds really simple, but that's something that if we have that in an Excel spreadsheet, there's no push notifications coming to you to say, hey, do you know what, your assistant isn't here today. And it's something that we found to be of huge benefit, and people have reported great things about it. Other things were trackers. So when I say trackers, I'm talking about tracking people's passport expiration, people's labour cards, Emirates IDs, visas. Okay, again, you can manage the process effectively, but remembering when you need to apply, okay, and remembering that person needs to renew their passport, you wouldn't believe how many people it's assisted.
The latest statistics show opposing trends for two of Dubai's most popular villa districts, that's Arabian Ranches and Emirates Hills. According to a real estate portal, in the first 6 months of the year, Arabian Ranches rents have gone up by a significant 6%. And the average villa lease price in January at the gated community was 250,000 dirhams per year. And in July this year, it had risen to an average of 265,000 per year. Just 15 kilometres across town in the upscale Emirates Hills district, rents have dropped 12.50% from an average of 1.2 million dirhams per year in January to an average of 1.05 million per year in July. Officials who were quoted saying that it's no secret that we are still dealing with the side effects of the slashed oil prices and other economic factors. So it's not too surprising that Emirates Hills would be affected. They added that it may be that Arabian Ranches, also an upscale community but to a lesser degree, is seeing an upturn in fortunes as renters with plenty of cash are deciding to spend it slightly more cautiously. The propertyfinder.ae search results statistics also show Arabian Ranches as the #1 of the top 10 most viewed communities for rental villas in July, while Emirates Hills did not appear on the top 10 at all.